Guys, keep trades. Today's April 10th, and it's been a great week for me, for the team. We've all been green, but I want to go over today's setup, which is obviously they're going to be the same setup as always, but I want to show you guys how can you capitalize on this craziness, right? How can you, these markets making huge moves, huge volatility, huge range. How can you position yourself and protect your capital, but how can you capitalize right? And it's going to start with that position sizing, right? I have taken very, very small size, and I'm making more than I make on a half size or a, full size position, right? I'm trading 20% of my position size. I'm just trading 2 micros on my live account, and I am making a very, very great profit, right? So that comes to position sizing, right? And it also comes with entries. So the number one thing to capitalize, right? This market might not stay for long. It could be tomorrow it stops, right? A lot of craziness going on. But how can you capitalize on this volatility? It's going to be position sizing, right? Position sizing meaning, right, sizing down, right? Cut your size down. And you want to be able to have a predetermined plan, right? So I know, right? I know exactly how much I will lose, right? Because this volatility and everything is very scary. But if you have a predetermined plan, you know where your stop is, you know how much you're going to lose, it's fine. Number 3 is going to be setting limits, right? Set limits. Stop orders. Because let's say I was in the short here and my stop loss was here. This candle just glitched up, shot up 200 points. Right, if my stop loss here and I missed it by a little bit, I could take an unnecessary extra 100-point loss. So if you set a limit stop order in, it's a better chance that you're going to get stopped on where you wanted to be if you took a loss. Position sizing number 1. You want to size down, and the way you size down is how much are you willing to risk. Understand your predetermined plan, know exactly how much you're going to lose. Protecting yourself from making a bigger loss, set your limit stop. And the lastly thing is going to be is precise, right? Precise entries. Precise entries, right? Preferably you want to be limit orders, right? You want to set your limit orders and you want a precise entry. Why do you want to do that? Because inverse close entries, it can look like it's close, but it could be 20, 30 points off from where you plan to enter, right? Let's say for example, we wanted to enter off of this inverse. Well, if you look at it on a normal day, it looks totally fine, right? Inverse close, entry long. But if you look at it, that is a 13-point difference, right? Which on a stop loss, that's going to be about, 85 points or 44 points. That 13-point difference is a lot. Maybe you waited for the retrace and set your limit order here and got tagged in, right? Again, setting precise entries with my trade, I did exactly that. So again, I didn't get a trade in the AM, right? My plan was to want to see the sell side move lower, fill this imbalance, and then look for longs. Long never came in. But my trade came on just a simple 1-hour model, right? So coming to 10 o'clock Pacific, we close it on this fair value gap. So I'm looking for the short. And what is my narrative for a short? What am I targeting? My target, I did not want to target a new low, right? Because we've already rebalanced here. We've already rebalanced low. We've already found buying. I was looking at these minor equal lows and this unfilled 5-minute imbalance. That was my full TP for this trade. Right? Again, position sizing. I had taken a scalp win, which I can go show you guys that right now. I had taken a scalp win, $4 to $5 in 13 seconds on a scalp. So I was already in profit. So I was only willing to risk about half of that profit. Right? If I took a loss, I would have ended green. Right? Coming into 1 hour. Huge candle, but we found that rejection and we found that breakdown. Right? Rejection off the 1 hour, number 1. And now I'm looking for what? A point of entry. Classic 1 minute fair value gap entry. Right? Did I market order in? No. Right? I found the exact point of the fair value gap here. 18,312. I set my sell limit here. So I know I am exactly going to get filled short at this price point. And my stop loss was at this candle that formed it high. Again, it's a pretty big stop, right? It's a 40-point stop loss, right? But now I know because I got in at this 312 price, I did what right when I got filled? I set my limit stop order limit buy stop here. So I know if it came back and stopped me out, I would be fine. But this trade just delivered beautifully, right? So 2 micros, 40 points. What do I know, right? 80 times 2. So I know I'm risking about 160. That's my risk, right? I know my risk on this trade is 160. So that is very good. Before I get into the position, I know the worst that's going to happen is I lose 160. And that is less than half of what I made from the first trade. Again, target wise, I took an internal scale at this low. Full TP here. This trade is ridiculous, guys. 100, about 115 points, right? About a, $220, $230 profit to this low. Full TP was 178 points I caught. Bam. 178 at a 40-point risk. That is how you capitalize. Past trades, we see 50, 80-point trades. Those are huge trades. Those are bangers. This market, 80 points is fucking nothing. You caught 80 points off this rejection alone, right? So what do you have to do? You have to detach. You have to let the market play out, right? Again, if we're taking let's say this market was moving at 20, 15-point candles, like normal market. What will my scale points be? This low and this low. Just because the market has changed does not mean I just fucking scale for 40 points, scale for 70 points, and call it a day. No. If I was trading a normal market, my scale point would be at this low and this low. So you do what? You stick to it. And I took 2 micros. And I absolutely freaking banged. Ridiculous. Right? This trade, I don't know exactly how much it made me. I do not remember. But if we go to a calculator here, there's about 111 points I ended up capitalizing on the first contract. So that's 222. And then I got 178 points on the next contract. 178 times 2, right? 356 plus 222. Oops. Right? That's a $578 profit. Yeah, I ended up being up around almost $1,000 a day. It's a $578 profit on 2 micros and a 160-point risk, right? That is ridiculous stuff, right? I don't even know how much the RR is, but I know it is pretty nice, right? So that is how we're going to capitalize on this market, right? You're still going to have to stay patient, right? I did not get any sort of trade in the AM. The AM was terrible. But if I size down, right? I sized down to what? 2 micros because I was in profit and I know I did not want to risk too much. Predetermined plan. Right when this candle closed and I'm looking for this bearish fair value gap to form, I already know exactly my stop loss. I know I was going to lose 160 if I lost this trade. And to protect myself from this crazy volatility, right when I entered short my limit, precise entry, set the sell limit, I put a stop order in. If it shot through it, it would stop me out. It might slip a little bit, but it will stop me out close to here compared to if it did that and destroyed you. It was ridiculous, right? And then lastly, trading it like you would a normal. Usually, 30 point, 40, 80 point trade, those are bangers for us. But this market, you could catch a lot more. So we let the trade play properly. But I know I yapped a lot. That's going to be it for April 10th. Trade recap, how to capitalize on this volume. Thank you guys for watching. Leave a like, leave a comment, subscribe. If you will enjoy the Discord, we have a link in the bio. We'll be happy to have any new members. And until next time, guys, peace out.